What's up, traders? It's Sunday night. It's time to look at the major things that trade to find the levels to trade this week in stocks, cryptocurrency, commodities, everything that moves that people are interested in. We're going to start out by looking at the stock market first, then we'll go into crypto, and then we'll look into the futures for commodities. So, the S&P 500 E-mini futures, that's what I like to use to gauge the stock market as a whole. And let's go do a quick recap. So, from the January high down to the Russian invasion of Ukraine low of February the 24th, there was a 50% level, which last week we looked at was holding so far right there at 44.54. Well, last week we broke below it and actually hit it, came back, broke below it, tested it to the upside, and it is now breaking down. Another sign that this is breaking down, which we can't quite say yet, is the 50% retracement of the March the 15th through March the 29th rally. Now, this bar is, of course, the Sunday bar. The futures market is open, but I always wait for the bar to close. So I can't really say that the S&P 500 has broken this last support yet, but it is looking bearish going into this week. The NASDAQ is also telling us a similar story. We had the full quarter one down move, came up, poked its head above it, made us think that we were going to an all time high, but then broke below it. Now we're coming back to its 50% retracement of the rally, and it's also giving it up. So for both the S&P 500 and the NASDAQ, it looks like we're going to get a lot more play down around the 4,100 to 4,300 range in the coming weeks. NASDAQ is probably going to get back into the 13,000s. And that's going to be the week ahead as far as it looks right now. If we look at the VIX, we're not seeing that elevated of a VIX. In fact, compared to where it was in March when we had the lows that we did in the stock market, the VIX is really kind of getting close to normal territory here. We've had some elevated VIX. If VIX were to pop up and hit 27, I think I would actually look at that as a market timing event. And it's looking like it wants to maybe get back up there with a big down day in the next week or two. And so I would look for VIX to peg that resistance of its recent down move, and that would be timing for me to call possibly a market bottom. So I'm going to be looking for that in the next 2 weeks. Bonds represented by TLT. This was a trade that I took on a Friday 3 weeks ago and got out. And some people that I talked to we're looking to dollar cost average into TLT. Well, dollar cost averaging is cool, but bonds are just kind of in a free fall right now. You're really catching a falling knife. And whatever technical analysis you can use to say, well, this might be a bottom, a turnaround point, the way I look at it is this: by getting out here on the break of the low that it made in March, I've avoided taking almost a 3x risk. And so I'm happy being out of TLT and waiting for another opportunity. We'll see when it comes. Let's look at crypto. So, Bitcoin, the big cheese, always has been in crypto. I bet that some people on other platforms are going to be doing something like this. I bet they're going to start drawing this line like so. Oh, it doesn't quite intersect. They're going to start drawing wedges and they're going to draw from here to here and all kinds of crap. The bottom line is this is a consolidation. It is messy. It had a chance to go when we had this recent late March rally. It spawned from a breakout that I've talked about and was able to play. Ethereum did much the same thing, but Ethereum came up and held its 3,500 resistance. And Bitcoin is basically following the tenor, the pace of Ethereum. I've noted that in recent weeks. But right now, you basically, there's no structure here. I don't care what people might say. This is just a messy consolidation. There's no support or resistances in here that mean anything. You just got to wait for it to break out. And I know a lot of people don't want to hear that, But until it breaks that high that it made on March the 28th, it is dangerous, dangerous, dangerous because it could just very well come down and break these lows. Ethereum, as I said, it is really starting to take over the market cap dominance. It's not over 50% yet. We'll look at that in just a second. It's trying to maintain this recent rally. Again, it's holding around the 3,000 level, that psychological level of 3,000, but you don't want to see it give that up. It really needs to hold here to have any chance of potentially going up. If it starts to behave like Bitcoin, getting back into this nasty consolidation pattern, you better hedge. You really better hedge because you're either in for a few things. Some more months of consolidation, testing these lows, getting into some real dangerous territory, or potentially breaking them. And that's really what I see happening. I really think that since November of last year, when we made the all time high and we failed to break higher, we've entered into a crypto winter, a crypto bear market. So, for my friends, I hope I'm wrong, but that's just what the price action and the market sentiment is telling me. One thing that I've, of course, been watching is Solana. It also gave up its rally. And 50% of that's the rally there. This sustained move off this consolidation, it did not continue. And so this is actually giving up as well. And Solana has been a very, very volatile pair, moving almost double digit percents within this move. So you have to be very, very careful here. And it is not really showing signs of going bullish. So be very careful in crypto this week. What I have been watching, and I did take a trade on Friday, was Ethereum Bitcoin cross, Ethereum versus Bitcoin. I was looking to see if this would actually break out to the upside. In fact, I posted about this. It got to my first target. Let me de-risk a little bit. But now it's come right back down to the consolidation. And what I was playing there was this 50% level inside this consolidation. Again, it held it, gave a spike here on Friday during the trading time. All weekend long, it's been a nice little slow grind up to that target. I was looking for this thing to break out. It still can break to the upside. In other words, Ethereum will relatively become more valuable than Bitcoin. That's still my going thesis, but it's been a little slow. So we'll have to see what happens there. But I like these kind of trades. I like the cross pair trades a lot better in this kind of market condition because overall, cryptocurrency is still in a bearish condition. But the relative value versus Bitcoin versus Ethereum, I think you can find some good trades in that. That's what I've been encouraging people to do. All right, let's look at commodities. So oil has been one of the easiest things to chart over the last few months. It came up, made a blow off top, pulled back down to the 97 support, which was the 50% retracement of the move from December. Came up to the 50% of the down move, about 112. Once again, comes back down to the 97 and bounces. It's on its way back up to 112, where I expect it to hit somewhere this week. Of course, oil is very volatile, so these levels are not going to be exact, but it's pretty clear what it's trying to do. Came up, blow off top, held the support, resistance, support, back up to resistance. And really, I think it's just going to bounce. I think we're going to find a sort of equilibrium supply and demand as producers turn on with these prices. That's my fundamental thesis there. So 112 is the point that I'm looking at for oil this week. Gold. Well, you can just call me wrong because I gave up on this breakout of gold. I still think it has failed to break the all-time high. But just like the meme where the guy wins the bronze medal and he's you know shaking up the champagne and pouring it on everyone, anytime gold makes a move, the gold bugs love to brag about it. So they're definitely getting excited to see if it can come back up and retest this high, possibly break it, and be right finally after years of being wrong. Silver, silver is also trying to recapture that high, but it really gave up the bullish breakout, I believe, over the last couple of weeks. More likely with gold and silver. I don't think this is a sustained move to break the high. I think this is really just going to be a consolidation. Same thing with gold. I really think that it is also going to just bounce around and bore people because that's what gold likes to do for long periods of time. So, not really that interested in gold. All right, let's look at the tech stocks. Ooh, tech stocks like Nvidia and Google. Oh, say it isn't so. They're giving up their rally and just consolidating as well. And you know what? All things considered, last year, 2021, we had one of the most bullish markets in history. It was, in my definition, the bullish because every single month of the S&P 500 made a new all-time high. It makes total sense that as we come into 2022, what worked, what gave such great gains in 2021 would not continue. I really want to emphasize that point to a lot of people, especially people in the crypto space. You made a lot of money last year. You don't necessarily get to do that 2 years in a row. And so with tech stocks, they're just not holding. And you know what? I could end up being wrong about my thesis, my high conviction thesis that these two stocks, Amazon and Google, are going to have these pre split rallies. That is what I'm still expecting. But as the summer gets closer, well, that rally may have just been a market based, a non secular rally that we saw here in March as the whole stock market lifted. Amazon's still holding its 50% level around 3K. We're going to see if it holds there in this week to come. Google is trying to come back and retest its lows. Don't want it to break those lows. I don't think it will, but then again, I'm biased because I'm long Google. So we will see. You know what's funny is what has been a consistent winner is sugar water. Coca-Cola has been a huge, it just keeps making higher highs. I don't think this made us, yeah, there's a lower high there it made on April 4th, but higher highs. Sugar water. Same thing going on with Costco going up, waste management, little pullback there. Value stocks are still the play for this year. There's Target. Target was a really good buy off of its post earnings level. And I made this point to people. I'm going to make it here in this video as well. We're coming into earnings season. We're coming into the quarter 2 earnings season of the stock market. The stock market is very slow right now. You can't just expect the bull market to continue and lift everything up. Instances like this with Target, where Target had earnings, popped up, created a 50% retracement to that earnings. See this gap right here? That's earnings. Don't trade options on the day before earnings. Don't do that. Wait until after earnings. At the point here where it pulled back on March the 8th, implied volatility had a whole week to come down, make all options cheaper, and give you a really good entry on a technical level with low implied volatility to play it up. Earnings season is coming up. Watch the stocks that you like. Watch them all if you can for these earnings moves because inside of a boring stock market not going anywhere, individual stock earnings are going to happen and move the stocks and create trading opportunities to get investments, make money, trade. That's what you're going to have to do. You got to put in the work this year. You can't just let the market go up and make you wealthier just from doing nothing. You got to find these opportunities. So this week, we're starting to get a couple of earnings, important earnings. They're just going to get more and more as the week goes along. What I may try to do is I may try to look at some of these earnings of stocks coming up if I can make a catalog of them. The reason I'm hesitant to do that is because I don't want people taking options right before the day before earnings. Oh, I hate people losing money. And that's all you do in the long run if you do that. Maybe you'll win, but it's a coin flip either way. Rant off. ExxonMobil oil, as it comes back up, this trade is just not dead. It's a great dividend paying stock. And I know a lot of people think that oil is going the way of the dinosaur of which it came. But Oil companies are still making money despite all the FUD. They're still paying a great dividend. Oil may stay up at the price that we're looking at, up in the I think between 80 and 120 is really where oil is going to sit for years to come. And people still need to fill their cars up. It's just the way it is, along with everything else that we do energy with. Tesla, Tesla has created a second opportunity around the 900 level. And I think this whole stock market pullback is giving perhaps people a second opportunity to enter into this potential pullback. Now, Tesla's a meme stock. It really is. And meme stocks tend to hurt people. I am waiting very, very patiently on Tesla, but I am watching that 900 level, and you should be too. So watch and see if it pulls back from this recent trend. It's actually held it pretty well. And that's the thing. I made a video about this for Best of Us Investors. Take a look at Ford. Ford on the lower time frames, even though we've had a very bearish week, a very bearish past week, 2 weeks of the market coming down, EV stocks like Tesla, Ford, even the old favorite NEO have shown some signs of holding their ground. NEO's holding this nice earnings rally around earnings rally at 1848 is holding there. Rivian is not quite holding as well. They're just not making anything yet, so what can you expect? But EV is starting to get very, very interesting. Now, what's not interesting are two that I may have to give up. AMD was an entry off these lows. It is just bleeding off. I don't want to hold this thing anymore. Sorry, AMD. You did well for me here in this trend up, but I just can't stand to get in this valley of risk. Probably going to come all the way back down to 80, 83. That's almost a 10% move down. I just don't want to handle it. And last, Facebook. Facebook is one that a lot of people asked me to do an analysis on back when it dropped all the way down here. I was making a meme out of it. Facebook can't possibly go lower. As it went lower throughout February, bleeding off the people that thought they were getting a deal, now you actually have a setup. Now you actually have this buying momentum we had from this stock market rally. It's pulled back to around 210. It has to hold here. I don't want to hold it if it gets back down into this range because we're going to have earnings coming up pretty soon, and you never know what that's going to be. Last earnings definitely wasn't good. So this week is going to be a week of managing risk, possibly taking some losses that I prefer not to do, but protecting the capital for the rest of the year. Hope you all trade wisely, and we'll see you in the next video.